Hey, welcome to the Real Estate Reserve podcast. I'm Jason Ballin from Hard Money Bankers, Ian Horowitz from Equity Warehouse. Got a great guest here that we're going to introduce in a second, Heather Dreves from Secured Investment Corp. We're going to be diving into funds, debt funds. Maybe we'll talk about equity funds as well as, I don't know, but definitely debt funds. I think that's a topic that's very prevalent for a lot of real estate investors on the residential and the commercial side. And I don't think we've had this topic before on any of our podcasts. So if you're tuning in for the first time, welcome. I promise we will, you're going to have a lot of fun, hopefully learn something. And if you're a return viewer, follower, listener, welcome back. Thanks again. We truly appreciate the support.
Yeah, it's definitely a good day to time it up because I think old Jerome Powell's coming out today and talking about what the rate, if they're going to move them or not. And I know today's July 26th, just to document it. And they are talking about raising it another quarter point. And everyone's like, well, I can't get my deals done. And we all know how to do owner financing deals. Everybody knows how to be creative structure, right? It's the hot topic out there right now, but you still need capital to do the deal. And we've talked a lot about raising private capital, but I don't think we've ever really talked about how to structure it from direct placement to funds to secured investments. And this will be good for Heather to come in and talk. And instead of us both having our blue shirts on, we might as well bring in some color in here and bring Heather in. So notice we're both wearing blue. And she's wearing black, so not much more color. But hey, Heather, what's going on?
Yeah, people around the office ask me if I'm going to a funeral pretty much on a daily basis because I think my whole closet is black and gray. Gray's color, right?
Yeah, you can come hang out with my wife. It's the same color palette. So
we all know, I guess we all have our standard uniforms then.
Yeah.
Colored uniforms and outfits. So Heather, thanks for joining us. Maybe let's just start with a little bit about yourself, background, things like that.
Yeah, absolutely. Thanks for having me. I'm really excited to be here. I followed your guys' podcast, so it's pretty great opportunity to be here talking with you folks. So a little bit about myself, probably not much different than most. Fell into this industry 18 years ago, honestly. Knew nothing about private lending and managing funds and raising capital. Had a friend that was in it, asked me to come on board. We had previous experience working together. And at that time, I thought that if you were going to buy a piece of real estate, you went to your bank. And if you had capital to invest, you went to your financial advisor. And within about 30, 60 days, realized after working there, my mind was blown. The opportunity, whether you were a passive investor or even an active investor was just, I couldn't believe it. It was blowing, to be honest. So fast forward 18 years, I'm with Secured Investment Corp. We manage several real estate funds. We're a private lender, and just am pretty happy that I've been able to help, my clients create generational wealth for themselves and their families. And they're living these lives that, they're allowing their money to work for them. And then we've also been able to really assist our active investors, with their funding needs. And, just like the idea that I can take these two different completely clients, put them together, and we're helping them accomplish their goals and create financial freedom for themselves. So, it's cool.
Yeah. I mean, I think you brought up a good point, and the point might be a little different than where you think I'm going with this, but you brought up creating generational wealth for your investors. And, Jason and myself, we both raise capital for the deals that we do. You guys are in similar businesses. I'm more on the active side, but I think there's like a message there. And, when it comes to raising capital, I think a lot of investors, and you guys know this more from the borrowing side, it gets very greedy, right? Versus saying, okay, I'm here to help provide something for my investors. There's a common goal. When you guys set out to raise capital, obviously that common goal is generational wealth, but how do you actively show that to your investors so they actually realize that, hey, if I do this, I can create this revenue stream? Because both the sponsor and the investor need to have a common goal for the investment to work.
Right. Yeah. And I think, it kind of depends on the investor. I mean, we have two different types of clients, right? We have some people that are trying to create cash flow. Maybe they have retired. We deal with a lot of dentists that sell their practices and they want their money to work for them. They want to continue to live the lifestyles they've become accustomed to from regular income. They have a large amount of capital, and they're putting it to work for them. So there's opportunity to create that cash flow. On the flip side of that, and this is something that's pretty exciting lately, I don't know about you guys, that I've noticed, is younger generation looking for alternative investments right now. And these are people that, sometimes are active real estate investors. They're out fixing, flipping, brokering loans. They're making this money, but they're educated enough to realize that, hey, I want to grow that capital. And so they're looking for more of a growth model, right? They're looking to invest their dollars in something that's backed by real estate, and not necessarily receive the cash flow, but find something that has an opportunity to reinvest and compound their investment and their earnings. And that's pretty exciting to me. I mean, 18 years ago, this was like the millionaire next door, right? The guy that drove the crappy truck, that had a bunch of capital, that's buddy used to get him to fund notes, and they didn't want to tell anybody about it, right? I mean, I had guys that told me that. They're like, I don't want to tell my buddies about it. Then there's not enough deals for me. I think that's changed. And so, I think for us, the way that we display and show them the opportunity is dependent upon what their strategy is. What are they trying to do?
I agree with that. And this industry has certainly changed. I mean, we started 17 years ago, and we were in our late 20s at the time, and nobody was close to that age. Everybody was 50, 60,
Yep.
70, 80, 90 years old. And it was typically retired or high net worth ex-business folks that had capital that they just lent, on a one-off situation. There's no YouTube. Wasn't
Right.
that much. I mean, we got on YouTube and early on, and it was one of those things that, like you said, it just wasn't a built out machine. And that was old school, and the newer school are younger, more ambitious people. I mean, a lot of folks got into lending or got into passive investing, not even lending, but just passive investing, because they made a lot of money in real estate investing. And they're like, this is a lot of work. I already got my hands dirty in my 20s, my 30s, my 40s, my 50s. Like, I'd rather take a smaller return and, have less exposure, less hard work and things like that. So I think it's a good thing that younger folks, like you said, even if they have $20,000, invested into a compounding vehicle. Now, obviously, if you have $20,000 and you're an active real estate investor, you could grow that. The velocity of growth could be significantly higher, right? You could turn $20,000 into $100,000 in a year. You're not going to do that in a passive investment. But like you said, it really is going to depend case by case on the individual. And what do you want? Like, do you have a full-time job that you love doing and you can't go out, flip a house, buy a multifamily property, invest in a self-storage or commercial unit? Passive investing might be best for them. So that makes a lot of sense. Let's talk a little bit about kind of funds in general. It's a newer topic to the show. I think Ian and I have experience with it. I think a lot of real estate investors in general don't think about the fund model. Maybe it's just too expensive, or it's just a little bit more discipline for them. They're like, and a lot of them use hard money, private capital, friends and family money, banks, things like that.
Or just break the law.
or break the law, because they for being naive, just not knowing.
Correct.
Right.
Just not knowing. So, like, it looks like on your website you have a few different types of funds.
Mm-hmm.
A Reg A fund. You look like you have some high yield funds, Circle of Wealth funds. Like, maybe just talk a little bit about that, because I think most people are just like, oh yeah, I have a fund, but they don't really know what it is.
And they're a lot of work to manage. I mean, 11 years ago when I came on board, my job was to dial for dollars. My loan originators and loan officers would bring a deal into my desk, and I literally would get on the phone and start calling my contacts. Hey, I got a deal in New Jersey. I've got a deal here. Do you want to fund it? And that's how we funded deals. That's clunky at best. It's frustrating for borrowers and brokers. We're different because we do originate loans for other people, not just ourselves. And so you've got this borrower and broker trying to close on this deal. And you guys know, if it's a good deal, time is of the essence, right? You got to close quick. And I'm trying to line up my guy that's got a self-directed IRA account, which is clunky. It takes, a week, 2 weeks to get those funds in. And so that's kind of was our evolution into managing funds. We said, there's got to be a better way to do this. We still have people that want to be a direct lender and basically fund a note or a lien. But we also had a lot of people that were like, hey, I like the idea of that, but I don't want to foreclose on that guy if he doesn't make his payments. I don't want to front for insurance costs. I don't want to make sure he's paying his property taxes. Why don't you guys just create some kind of a vehicle where I can just put my money in it and you guys manage it? And I have no headaches of it. And so that was really where we evolved into opening our first fund. And so at that time, 10 years ago, the only kind of real estate fund at that time you could open was what was called a 506 fund. And this meant you could only allow high net worth accredited investors. They had to prove that they were accredited, meaning they had to have $1 million in assets, or they had to qualify through their income if they made $200,000 a year as an individual or $300,000 as a married couple. So that in itself eliminated a lot of people, right? And we did well with it. It was great. We had a $50,000 minimum, paying out average returns of 10%, and people love it. I mean, I have people that have parked capital in there for 10 years and never moved it. They're like, I don't want to deal with it. You guys do a great job. You have the infrastructure, you have the teams, you're bringing the deals in, you're servicing the notes, you're doing foreclosure management, and I have no headache. And that's really kind of how we evolved into that. And then we opened up what's called a Regulation A+ fund. And this was, I don't know, when the Jobs Act changed about 4 years ago, we had the ability to open it because we had all these people that wanted to invest in the fund that had small dollars. You know, hey, I had a 401k that was 10 grand and I rolled it over to Quest or Equity Trust, and now I don't have anywhere to deploy it. So we opened up the unaccredited investor fund. But from a fund management perspective, a unaccredited investor fund is 10 times the work to manage, the filings, all of the things that you have to do. There's just a lot of logistics that go into it. So my word of advice would be think hard about opening one.
Yeah, that seems to always be the conversation at the end of it. Everyone's like, I'm just going to go raise capital. I'm going to do this. And then at the end, everyone that has a fund's like, man, it's a lot of work. And I don't think it's a deterrent to not go open a fund. I think it truly is, right? Because if you could just go over some of the work, I know audited financials is like one of the biggest ones when it comes to doing a Reg A. Like what other big task items that people might not think about when they open a fund of what they might have to do?
There's a lot. So we have a massive accounting team. You know, our fund is what's considered a debt fund. That means we're lending money out of it. We get paid off. People are buying. There's a lot of transactions in and out of it. So it's a multi-asset fund in comparison to like a syndication. You know, a syndication is going to be a single asset. Maybe someone's going to raise a bunch of capital to buy a self-storage unit. There's not a lot of flow back and forth other than rents and things like that. So accounting is a big responsibility. Like you said, we fully audit our funds with an outside auditing firm. Our accredited investor fund is not required to do that. But from an operator's perspective, one, you want to make sure that your fund members are protected, but you also need to protect yourself, right? And having your funds audited by an outside auditing firm is extremely important, and it protects you in the event someone comes back on you and says, hey, you guys weren't doing things the way you should. Hey, guess what? We have a third party that audits our fund. So auditing is a massive undertaking and it's extremely expensive. You have legal fees. You have, securities attorneys that set these funds up and make sure that your documents are all proper. You have K-1s at the end of the year. Then you got to decide how you're going to pay everybody out. One of our funds pays out monthly. So every single month, our accounting firm is paying out 800 members of a fund. So think about that. And, your end of the year reporting information for them, their tax return information, which is their K-1s. So there's a lot of logistics.
What do you think for real estate investors listening, like what dollar amount of a fund, like you don't want to set up a fund, for, I don't think at least for a few $100,000. It's just economically won't make sense. Like, what do you think that magic number is of, hey, after you get to this size, it potentially makes sense?
I would say at least 5 million. I mean, it's a lot of work and expense for under $5 million. If you're doing under $5 million in transactions, you can do that one off, right?
Sure.
Like we do $5 million in a month, more than that, So I think if it's under 5 million, you really need to consider, whether it makes sense for you. And then also, if you're using a 506c fund, which is your accredited investor fund, that's much easier as far as the logistics to manage from a filing perspective. You do have to let the SEC know that you have it, but you're not going to be required to do quite as much as an unaccredited investor fund. The other thing that I didn't even mention is what kind of a software system platform are you going to use to manage it? Because most of these clients want to log in and see their accounts, especially if they set their accounts up to be what we consider growth mode, where they're just reinvesting their earnings. They want to know how much they made, even though they're not receiving it. You have to have some kind of way to report that. Really like being able to log in and see their accounts. So that's another thing to think about.
Yeah, that was something that just caught my eye. We're in the process of switching investment management IMS software, or IMS investment management softwares. We're in the process of switching, and we'll probably do a show on this because it's been a very rough ride here in the near future. But that was one of the first things I noticed on the new platform we're jumping on is they had a dividend reinvestment thing. And I was like, man, that looks cool, but then it's also like super dangerous, because I think there's something to be said. And Jason and his business partner, Chris, have kind of mentored us. They have mentored us on how to raise capital. And he would always say, he's like, man, just make sure that the dividend payment goes out. I don't know if I lost my internet, but paying out, everyone froze, but paying out the investors and actually getting it in real time, because it makes the investment real. Right. And I think a lot of people, when you're going into investing, like, you got to make that investment real to yourself. And I think that's what's so hard about stocks and some of these other investment types. It's not real. Like, real estate is real. Like, whether you guys from your private lender side that both you guys do, you have a secured asset on the other side of that. And then if you see that dividend come back, you're like, holy shit, it works. I want to pour all my money into it. And for us, when they're investing into an equity deal, it's like, man, I bought into this deal. Oh my God, I got my first pref payment. I got my refinance proceeds. I got all these things. It becomes a super real investment for someone. And it's almost like the floodgates open and they start telling everyone. And they're like, oh, I got this money here and I got that money there. And here it comes. So it's an interesting way to think about it, but I get it. If you got a growth model and you have the way to account for it, it's a no-brainer to do that.
Yeah, we send them out. They'll get statements, so if they're in the fund that pays out monthly, they'd get a monthly statement. They'll know exactly what their earnings were, and then they can watch their equity balance increase, which is, yep. And you're right. Like, back in the day, we called it mailbox money. All of our investors, oh, I love getting your checks. I don't think we send any checks out anymore, but there's a downside to that, right? Like, I literally had a guy one time call me up. He said, I know who you are, but you don't know who I am. And I'm thinking, okay, this is an odd conversation, right? He said, my neighbor does business with you. He's out of town and I'm checking his mailbox and I see all these checks and I want in on this. But his neighbor didn't want him to know. Oh. Because he didn't want to lose out on any deals. But, there's a lot to be said for that, getting those checks and seeing what their earnings are. The growth model's nice. If you have people with self-directed IRAs, they're so powerful, right? Because what tends to happen with a self-directed investment is they get paid off earnings. Then they got these small dollars sitting in there. These custodians charge them these crazy fees, which is how they make money. I understand. But then they have to save up enough to put it into something else, because most of these investments have a minimum investment. So we have found that is one way to market, is through these self-directed custodians being at some of their events, because those types of clients that set those accounts up are looking for these kind of investments.
Yeah, makes sense. So let's talk about the Reg A plus fund. Mm-hmm. That's actually something I'm not familiar with. I'm assuming that's a non-credited
yep.
fund that anybody can get in.
That is correct. Yep. So $1,000 minimum investment. And it's open to the growth model. They can reinvest, they can have their earnings paid out. And to be honest, at first we kind of thought, what we thought originally was that we would put it on the website and people would just invest and we wouldn't even ever talk to them. That's not the case. You guys know this. Fundraising does not work that way. But what it has done is we have a lot of investors that are accredited, that have kids, young adults, senior citizen parents that are, trying to subsidize what they have in retirement and living in assisted living. It's been given them the ability to create, some cash flow for them. It pays out about 7.5%, which isn't terrible. And then also some of my clients that are like, hey, I don't want to prove that I'm accredited. I don't want to show you all my stuff. Every once in a while you get someone like that. We still have a home for them, to help them with that.
And so just out of curiosity, so, and I'm sure behind the scenes, it's, there's more heavy lifting, but related to that compared to the accredited investor fund,
mm-hmm.
Anyone can invest. Obviously, is there additional kind of quality control that you have to do, auditing, things like that? Does it cost more money? Because, it seems if it's apples to apples, it's kind of like, well, I'll just set it up this way, and then I could put accredited investors in there, or non-accredited investors in there.
It's different as far as the back office goes. It's more filings with the SEC. So every quarter we have to report. We are required to have it audited outside of the company, which we were doing anyways with our other funds. It was about $100,000 to even set it up to get approved. It took about 12 months. I think it's a little quicker now. We were kind of one of the first ones back 4 years ago. And then the other thing I would say is the clientele. The investors that are in there are much different. Sure. Especially when you're talking small dollars. I think that's the biggest indicator. Your guys that put $1,000 in and call the next month because their car broke down, we're very clear up front. It's a 12-month tie-up period. This is not a savings account. If you want to be able to access your funds, this is not the investment for you. But you guys know people tend to hear what they want to hear, and forget those conversations. So there's a lot of direct communication with those clients that are like, hey, having a crisis, I need my $1,000 back. It's like, you just put this in 2 months ago. We can't execute yet. So
yeah, I think Grant Cardone, he kind of came out and said, everyone sees like, oh, raise $1,000 or, invest $1,000. I'm pretty sure that he did a Reg A, because the Reg A officially makes you a public offering, right? Like that's the big difference.
Correct.
Like technically everything else is private. What we all do, private placement memorandums or private placement of capital. This truly allows you can come on here and legally actually talk about, and if we're like, all right, Heather, just give us the sales pitch. Like you could actually do that on this legally. Whereas if I went out and then said, hey, I got an investment coming up, there's a little bit of a gray area if I'm actually allowed to like really talk about the details or not.
When did that become common, that type of fund, over the last few years?
Jobs Act, right?
Yeah, Jobs Act, right. About 3.5, 4 years ago.
Yeah, that's right. Yeah, no, because that fund was not around when we started. Years ago. Only accredited investors and things like that. I mean, that's obviously you said what the price point was, right? $100,000 plus back office plus other stuff. So like the barrier to entry is not all that easy, right? If you're buying 10 single family houses, it's obviously not going to work. But it's good to know for massive expansion and things like that, for real estate investors or commercial property owners that have a portfolio already that are looking to expand. And in essence, that, I guess, like you said, you can market whenever, right? It's just an open fund that constantly people can invest into. I feel like that's how some of these crowdfunding operations were set up, but they don't use that type of fund. Do you know how there
are several that are crowdfunding platforms that use Regulation A+.
Got it.
Yeah. Well, there's also Reg A, and then isn't there a CF delineation, but that caps you at $5 million or something? I think dude, I get so lost whenever the securities attorney starts talking. I'm just like, Michelle, I love you, but just tell me what I need, because I don't know. This gets so confusing so quick, and there's so many letters. But I think there's a CF, but that caps you out, which stands for crowdfunding, and I'm pretty sure it caps out at $5 million. I'd have to go back and look.
No, I think you're correct.
Yeah, and then the Reg A is like the big boy, because I remember when I heard Grant Cardone talking about it, I was like, shit, let me look this up. This is a great idea. And I was like, barrier to entry is ridiculous. Because I would think at that price point, I mean, you got to be looking 10 million plus. I know you said 5 million is the magic number, but I think for a fund like that, you probably got to be 10 million plus without even thinking about it to service all that, you know?
Well, and when you have minimum investments of $1,000, let me tell you, it takes a lot of investors to get to that.
Oh, I've thought about it because I used to be my backstory is my business partner and I, we were firemen for the city of Baltimore.
Oh, nice.
And we would always talk. We're like, man, we got all of our friends that just don't have a lot of money, and like we want to help them, and they all want to get in our deals. And it's just like I can't place $1,000 or $5,000. And we talked about this, and it was just like, could you imagine having 1,000, to raise $1 million to have that many people to get to $1 million versus saying I only need 40 investors to get to $1 million is a way different story. And investor management's a very real thing.
It is.
What do you guys do? So we know you have a platform, your platform. I think you said you use Crowd Engine. What other investment management stuff are you doing for your investors so they feel like they're a part of the deal? You guys send out newsletters or what do you guys do to keep them involved?
We do a lot of things. On a side note, my son's a fireman, so thank you for your service. I'm a big fan. So a couple things. We also use a software system called the Mortgage Office. We use it for two things. One, we use it to service our notes that we originate. And so our clients that buy notes from us, because we do have a lot of people that just are more of a direct lender or investor, they can actually log in and we collect payments through that and all that type of stuff. It has a fund management module. So we also have all of our funds on there, and we use it really to just do distributions. It is the software system. It gives us the ability to waterfall all payouts. So we have a software system for that. We do a monthly webinar, or I do a monthly webinar, really just kind of a market update. It's an opportunity they can get on, ask questions. We do provide really detailed reports for our accredited investor fund on a quarterly basis. And then our other fund, the Regulation A fund, we provide a quarterly report also. So they'll know how many loans we originated, how many properties we bought and sold. They'll get a profit and loss page in there. So we're really open and transparent. And then probably the last thing I would mention is our lines of communication are unreal. They call and they are either answered when they, bring their direct call in, or they're followed up with by the end of the day. And that's one of the things that a lot of our clients say is like, I've invested other places. I can't even get a hold of the operator. He doesn't call me back for a week. And it's like, that's just unacceptable, regardless of whether they have a serious question or not. They clearly are looking for more information.
Jay, you're on mute. Oh, there you go.
Sorry. If you have one capital investor or 1,000 capital investors, you still gotta, that investor's first. Their money takes priority over your money.
Absolutely.
And I think a lot of active real estate investors and commercial property owners, not that they don't take it seriously, but I don't think they realize how serious it is. It's like, you're selling your house if you need to pay off your capital investor. They're the most important part of that transaction. And on the other side of it, raising capital snowballs extremely quickly when you take care of your investors, because guess what? They share their experiences. It's not like the typical private capital investor. It's not like they do a deal with you and they get that good return, or they get a return and it pays off. They're like, yep, I'm good. I'm going to go do something else now. Like, they're in for life. As long as you keep taking care of them and doing stuff, you do so. And, obviously you start on a budget. You start, you might not be able to do weekly webinars or, monthly statements or things like that, but something. And, the one thing, and Ian kind of equated to this earlier, the one thing that I think so many real estate investors do, which I don't personally agree with, is, they don't make monthly payments to their investors. Maybe they pay them back on the back end. They do some sort of agreement like that, where it's easier for the real estate investor, cash flow wise, but like you're hitting your investor once. Like, if you're making weekly, monthly, regular payments to investors, Ian does quarterly distributions on his equity deals, and I've encouraged him to do monthly distributions. And I know that's harder to do. I get it. That being said, it's that many more touches, especially when you're in capital raising mode. The more touches that you have over and over and over and over and over with your capital investors and dings, and it can be money in their pocket. It can be, whatever, a video call with them, an email, whatever, a statement that goes in. Like, I always feel like if someone's out there trying to actively raise money, just keep paying your investors more and stay in front of them with good quality stuff over and over and over and over and over, because every single capital investor that we started with that had $100,000 has $5 million, a few years later, right? They start with something small and they work their way up, and they tell all their friends and they tell all their family, then they invest their self-directed IRA. And next thing you know, a few years later, you've really grown a powerful investment vehicle for them. So I don't know, it's a tidbit. And I think if there's one big benefit of the fund is it kind of can snowball itself, just because it has some automation components in it compared to some other vehicles.
Oh yeah, I agree with you 100%. And on the flip side of that too is if you're not communicating with them and you're not calling them back and they're not hearing from you, they're going to tell everybody also, and that can snowball in a negative way. But I would attest that most of our success has been friends, families, referrals. This guy had a great experience, started making money. He told his dentist buddy, he told the next guy that he knows. And this is a 11-year period that we've grown this. And we currently have about probably 1,200 active investors that are either doing, direct deals with us or putting money in the fund. And it has snowballed.
Yeah, and it takes we used to say it in the fire department all the time. It takes a whole career to build a reputation, and it takes 2 seconds just to fuck it up. And it's the same thing in business. You can have the best reputation in the world, and you don't return someone's phone call, you don't do what you say you were going to do. That's it. You're done. You could lose all your capital investors, all your deals, your relationships with your brokers, your debt brokers. Instantly, it happens, and I think a lot of people I think a lot of it comes back to greed. And not doing the right thing and having that common interest and actually doing the right thing, putting the property first. Or for me anyway, we put the property first, and then everything else works out for the investors and ourselves in the end if we put the property first and do the right thing by the property. And I'm sure it's the same thing for you guys. I know I've heard Jason talking about it a lot. If I put the loan first and I do right by this loan, I do right by this capital investor, more loans come through the front door, more capital investors come through the front door. And, I think a lot of people need to take the time to think about, what is your reputation? What is your skill set? You guys seem to have the skill set of raising capital, and you can deploy it in loans. You can deploy it really in any asset. Loans could dry up tomorrow. You could have to get licensed tomorrow, but you still have the ability to raise capital, which I think is a huge skill set. And knowing that is what makes you a good real estate investor. So.
We have a motto on our wall out. We have a bullpen where our loan officers sit and some of our salespeople, and it says, you get more of what you want by helping others get more of what they want. And we focus on the deal, whether we're focusing on the borrower or the broker, and then also the investors that are, trusting us to invest capital with us.
I'm sure your investors want to hear this, but are you out there giving a Jordan Belfort Wolf of Wall Street speech every morning to the loan officers, get them all jacked up?
We actually do that every Tuesday morning. We have 100 employees, and we all cram in the bullpen, and we do what's called the staff huddle.
Nice. Well, there you go. Sounds like fun. But no, this has been really good. Opening our eyes to a Reg A and funds in general and different ways to structure deals. Right, Jason does direct placement. I do equity. I do private placement deals. You do funds. And there's a million ways to invest in real estate. But before we close it out, I do want to ask you, we ask all of our guests, I should start putting this on the when you sign up to do the podcast, but it wouldn't be fun if we didn't put you on the spot. But what's one book or podcast that you're reading right now that you're like, hey, everyone needs to read this, or it's really changed what has made your career?
Yeah, well, so we do a book of the month club here. We pay our employees $120 to read a book. And actually, the book I'm currently reading is written by Dave Van Horn. Are any of you familiar with him?
Yeah, he's local here to Philly.
Yep. So he wrote a book about notes. And at first I thought it's been interesting. It's been eye-opening. I know a lot about notes, but you can always learn. And it's just a little bit about how he got started in it and the different strategies with notes. I have my team reading it, just to kind of educate them. So that's currently, what I'm reading. I guess my next one would be Atomic Habits. I do believe pretty strongly in having good habits, And so that's probably one of my go-to for my team, especially our new hires. But we're big on reading and improving, people's personal and professional lives here at the company. So we do encourage them to read. They're provided with that opportunity on a monthly basis.
Yeah, that goes along with pouring into the properties, pouring into your employees, right? Like it's the same thing. If you pour into the staff that is willing to help you, only good things are going to happen. So it's been a common conversation around our office as well. But yeah, we really appreciate you coming on. Where's the best place people can find you on the internet? They want to reach out to you. They want to talk to you about how you set these things up, or they want to find out more about what you do.
Yeah, well, thanks for having me. This has been a great conversation. I feel like we could probably talk forever. They can always reach us at our website, securedinvestmentcorp.com. Once they're on there, they can actually schedule an appointment to have a conversation with myself. I've got a pretty small team. Even though we're a big company, the investor relations team is fairly small. So always our website, securedinvestmentcorp.com. We've got our notes on there that we sell. We've got a lot of information about our funds on there. And I'm always open if people want to pick my brain about managing funds and, just want more information about my experience. I encourage everybody to reach out.
We appreciate that. So look forward to it. Guys, if you got any value out of this, feel free to share the show. The best way you can let us know that you're enjoying this is leave a comment or a 5-star review, and we will catch you on the next one.
Thanks, Heather.
Thanks, guys.
Thanks for tuning into the Real Estate Reserve podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too. Till next time, thank you for tuning in.